Trust Corporation is pleased to introduce GK Mutual Funds, the trust that helps you build your own wealth. Choose from any of our 3 mutual funds that best suit your financial goals. The GK USD Income Fund, an instrument to serve the vision you have for your business. Start with an initial investment of $1,000 and subsequent minimum investments of $100 monthly. The GK Jamaica Dollar Growth and Income Fund, designed to serve all your personal goals. Start with an investment of 15,000 Jamaican dollars with successive minimum monthly investments of 1,500 Jamaican dollars. And the GK Jamaica Dollar.
Welcome to GraceKennedy's Investor Briefing. I am Frank James, Group Chief Executive Officer. With me is Andrew Mesado, Group Chief Financial Officer. We want to welcome all participants who have joined us for this webinar, all our shareholders, investors, analysts, media, all who have joined for this webinar, welcome. This briefing has been scheduled to run for approximately 90 minutes. We're going to spend 45 minutes to just under an hour on presentations, and then we will leave time for questions and answers. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. That is gkinvestor@gkco.com. So I'm asking that you email your questions to gkinvestor@gkco.com. You may also send a text to our communications team, and you can send that text to 876-537-1950. So you can text any questions or email your questions, and the text is 876-537-1950. All right, so we're going to get started with our investor briefing. I will share a presentation, and then Andrew will give some more details on our financial performance. Let me start by saying what a tremendous honor it is for me to be leading our group at this time and to be building on what is an outstanding legacy of 103 years. What was started by Dr. John Grace and Fred Kennedy on Valentine's Day in 1922 as a small trading establishment in the heart of downtown Kingston, today is representing Jamaica in over 50 countries across the world through our food brands and our financial services throughout the Caribbean region. What hasn't changed is that we remain headquartered in downtown Kingston, and Jamaica remains at the heart of GraceKennedy. You will see on the screen some giants of business and men of great character, so it is really a privilege for me to be following in their footsteps. I want to take the time in particular to recognize one of those gentlemen, my predecessor, Don Webby. Don is the person who I've worked with the closest over these years. He has been a mentor and a guide to me. He's an astute and visionary leader who has taken our group to great heights. And so I really want to thank him, not only for what he has done for our group, but also what he has invested in me personally, taking me to this point in my career. Thank you very much, DW. I also want to share with you some leadership changes that are happening at the executive level or have happened. We will be bringing together our domestic division and our international division under our foods business, or foods domestic and foods international, under one leadership structure headed by Andrea Coy. That happened effective the 14th of February as well, and we're very excited about the synergies that will come from that partnership between domestic and international, and we know that Andrea is going to do a fantastic job leading that initiative. Grace Burnett, who has had an outstanding career with GraceKennedy for over 25 years, will be retiring in August of this year, and Stephen Whittingham will take over from Grace as CEO of the GraceKennedy Financial Group. Stephen is currently Deputy CEO and will take over from Grace at that time. So your group is in excellent hands with an outstanding leadership team that is ready to take on all the challenges that are ahead of us, and more importantly, the many opportunities that we see to continue to grow our GraceKennedy Group and take it to new heights. So as we look to the future, I want to share with you a little bit about what has actually been achieved in 2024. 2024 was another strong year for us where we were able to continue to win with Grace. We were very proud of our teams. Here you'll see us being recognized by the JMEA and the Jamaica Chamber of Commerce. And in particular, what's exciting about these awards is a number of them are in ESG, or environmental sustainability initiatives. You'll see Grace Foods Processors Meats being receiving the ESG Most Sustainable Manufacturer Award. And we also won the inaugural Jamaica Chamber of Commerce ESG Award. This is a big focus of ours as we go into 2030. So we're very pleased to see it being recognized in this way. We continue in our distribution business to make great strides. We represent P&G in Jamaica, and we were awarded by P&G, one of the largest FMCG companies in the world, as the Extraordinary Distributor of the Year. Now, this is not in Jamaica or even in the Caribbean. This is across Latin America and the Caribbean, where we were one of 2 distributors recognized as Extraordinary Distributors of the Year in 2024. So very proud of the team, and we continue to represent P&G in an outstanding way in Jamaica as we grow that brand. But we also have our own brands, and we continue to innovate. And very exciting for me is that in Grace Foods UK, our new honey jerk seasoning, I think we have it here as well, because you'll find it in Jamaica as well. But in the UK, we actually were recognized for this product by the Guild of Fine Food Great Taste Award. And what's special about this product is it is actually the ingredients, and the mash is actually manufactured right here in Jamaica. It's sourced by our farmers here in Jamaica and then exported to the UK. And this is being recognized by the Guild of Fine Food Awards. Great, great innovation there. We also continue to be very pleased with our financial services group. In our Allied Insurance Brokers, we earned the 2024 Business Partner Gold Award for over 50 years serving the insurance industry. You'll see Amanda Bepat there receiving that award, our head of Allied Insurance Brokers. And Allied has continued to do great things as our leading insurance broker in Jamaica. This next award also is really very exciting. It is from the Capital Finance International, a UK-based business recognizing GraceKennedy Financial Group for excellence in digital financial innovation. Now you have to recognize that our digital factory is here in Jamaica, and we are being recognized around the world internationally for the work that we are doing here. This digital innovation has been generated here in many cases by our Jamaican people. In fact, when we started our digital factory, it was being led primarily by talent outside of Jamaica and mixed with local, young, enthusiastic, bright talent in the digital space. And that combination of experience and the youth that we brought here has led to a situation where now nearly all of our digital factory talent is local talent. So I'm really very excited about these awards that recognize not just the strides that we're making in the digital space, but also the talent that we have right here in Jamaica that has been able to execute on this. And you'll hear me talk a lot more about how digital is going to be transforming our financial group as we speak about the plans for the future. Our people also continue to be recognized, not just for what they are doing in GraceKennedy, but in Jamaica. We're very, very proud of Don, who received the Order of Jamaica, a very well-deserved award, and we continue to be very pleased with the contribution that Don has and continues to make to our Jamaica land we love. Also, Grace Burnett was recognized by IAJ for her leadership excellence, and we're very proud of Grace and all the things that she has accomplished, both here at GraceKennedy and in the wider Jamaican society. Well done, Grace. So 2024 was a good year, and we had lots of highlights. How did that translate into the numbers for 2024? Our financial highlights for 2024, we continued to grow our top line with revenue reaching $167 billion. That is 1.1 billion US. You'll remember that we celebrated hitting the $1 billion US mark in 2023, and we have continued to grow from there, hitting 1.1 billion US dollars in 2024. This is an increase of $12 billion, or just under 8%. And the food division continues to be the key contributor to revenue, and we saw $9 billion of that $12 billion growth coming from our food division. What did that revenue translate to in terms of profits? We saw profits growing faster at 8.6%, or just under $1 billion. As you have seen, we have continued to break new levels. In 2022, we exceeded the $10 billion mark. In 2023, the $11 billion mark. And now in 2024, we have exceeded for the first time the $12 billion mark in pre-tax profits. Importantly, I want you to recognize within these numbers that 3 out of 4 of our segments actually showed growth. Andrew will speak more to our segment results, but what we have seen here is our food division, which represents about 64% of our profits, grew 22%. So we saw 22% growth in profits in food. Our banking and investment segment grew by 26%. And our insurance segment, coming off a very strong growth in 2023 of about 55%, moderated a bit and showed growth of 8%. Where we did see decline was in our money services segment, and that was as a result of reduced transaction activity and lower remittance volumes in some of our key markets, in particular Guyana. We are seeing where the remittance space is changing, and we're seeing a tightening in margins. And so we have proactively responded to that in terms of our investments in digital technology, which is really transforming the way the remittance business operates. And I'll share with you a little later in the presentation how well equipped we are for that. But I can tell you that we are actually growing our digital remittance business, or grew at 44% in 2024. And so that is heading in the right direction. When we look globally at remittances, digital represents about 52% of global remittances. Coming into Jamaica, it's just over 20%. So that means there's significant opportunity to really grow digital in our Jamaican market. And we have started on that journey. It is going well, and I'm going to be sharing more with you about what we have put in place to really take advantage of the digital space in remittances. Our after-tax profits also showed growth of 6%, or $500 million, to reach 8.9, or just under $9 billion in after-tax profits. So what were some of the business highlights that generated those numbers that we just shared with you for 2024? It was a very full year, faced with many challenges, but more importantly, many opportunities that we were able to take advantage of. We're very excited about launching our inaugural Grace Food Festival in 2024. This is really a way for us to thank our consumers for the tremendous support that they have shown us over the years, and to connect with our consumers who really love and support the Grace brand. We were very pleased with the outturn, over 4,000 patrons coming in, and it was a true celebration of family, culture, and Jamaican cuisine. This is not something that we just did once. We are going to continue this, so you can look out for the food festival again this year. This is going to be an annual event as we celebrate our consumers and our brands. Solar power installations have been a key part of our energy strategy. We have continued to implement our energy plan, our multi-year energy plan. And we're pleased that in 2024, this resulted in savings of over $400,000. This year, we expect to be saving over $600,000, and we remain on target to be saving energy costs of over $1 million by 2026. The good thing about this is that it not only supports our profitability through energy savings, but it supports our ESG initiative and our drive for sustainability. So this is a win-win where we are improving in terms of the environment, in terms of sustainability, and we're also bringing more to the bottom line. So this project is across our factories, it's across our high-low stores, it's across our distribution centers that we are seeing the implementation of renewables, of solar energy, to reduce our costs and improve the environment. Also, we have been speaking for some time about the implementation of S/4HANA, our new SAP system across our food business, a big investment for us, and we're pleased to say that that implementation went very smoothly, no SAP downtime as a result of the implementation, and we're very excited about what is going to be coming out of this investment in technology, and I'll share a little more about that. Last year, we would have announced that we acquired Unibev Limited at the end of 2023. This was our water manufacturing factory, or spring water factory. And I'm very happy to say that that integration of that business has gone very well. The business was profitable in 2024, exceeding our targets. And we have seen strong improvements in the output from that factory and the level of uptime of the factory. So we continue to produce both our 876 and our Catherine Speak water at the Unibev factory, and that is going very well. Important for us is innovation, and in 2024 we saw a number of new products launched. You'll see a number of them on your screen there. Very exciting products. In the Jamaican market, you would see these exotic chips which have taken off very well. But in a number of our markets around the world, we have introduced new products. Many of you are familiar with Tropical Rhythms. We now have Tropical Rhythms Sparkling Tropical Rhythms, and that is also going very well. We have introduced Tropical Rhythms in the Tetra Pak, which allows you to take the product home, not just for one-time consumption, but for family consumption, and a number of new products that we have seen really well received by the market. As we introduce new products, we also deepen our expansion into our key chains, especially in our international food markets, where the chains are a key part of our way to reach our consumers. So you'll see that we have had new product SKUs added in over 500 public stores across the US. Encona sauce did listed in Tesco Express, and Sainsbury in the UK, we have listed our Tropical Rhythms 1 litre. So we continue to penetrate new channels, new markets in our international markets to drive the growth that we're seeing in that business. GraceKennedy Financial Group, we are now licensed as a financial holding company with the Bank of Jamaica as required by regulation. Very exciting is our GK1 app. Our GK1 app is the leading digital wallet for remittances. And what's really great about this is the repeat usage, which demonstrates that our consumers, our customers, are finding it meeting their needs. So we are finding repeat usage as high as 82%, which means as people use it, they love it, they find the convenience, and they continue to use it. The team will also boast here that our app rating on the App Store is 4.7 out of 5. And I can tell you, I won't call any other names, but there are a number of strong apps out there that are not rated 4.7. So we're very pleased with our rating of 4.7. And we really plan to continue improving the offerings from the app to make sure that we maintain a high rating. Remittance, I told you, a key part of how we're going to be transforming the remittance landscape is digital. And so we have launched the remittance feature in our GK1 app, and you'll find that we've also launched our first digital sub-agent through the partnership with Link, and that is growing very well. So digital is transforming the way we do remittances, and there are new things to come in 2025, which I'll tell you about a little later. As a part of our financial inclusion strategy, we introduced in 2024 our GK Money Sense, hosted by none other than Ding Dong himself, where we really talk about financial literacy and how persons can get involved in the financial system. And this has been well received by the market, and we think that this will continue to do well as we educate our customers, our clients, and the population generally on financial management and investments. A partnership that has worked very well for us is our Scotia Protect. This is a partnership with Scotiabank, and we underwrite within our general insurance business for Scotiabank customers, and we have seen 215% growth in written premiums in 2024. And this is something that we expect to continue growing at this type of rate in the next few years. We're very excited about this partnership, and we see great opportunities to continue building this business with Scotia. You would have heard us announce our buyback of shares. That has now concluded as of November, but we had repurchased 6.4 million units through both the Jamaica and the Trinidad and Tobago Stock Exchange. Artificial intelligence, AI, this is something that is here to stay, and we think is going to revolutionize the way business is done. So we have been very proactive in looking at AI and how it can be used to really enhance our business. We have launched a team that is spearheading the review of AI across the group, both in foods and financial services. We had our first ever AI day as we have started to get our team members to understand and be more comfortable with artificial intelligence. We have developed new processes, and this is going to be a big focus for the group as we drive the benefits of artificial intelligence, both through efficiency as well as knowledge and ability to make decisions in an agile and nimble way. So 2024 was a very active year, and it brought a lot of great things for the group. And we are building on that momentum as we go into 2025. I want to share with you the strategy for 2025 that will continue to drive growth for our business. Where will we be focused on for 2025? First of all, we're going to be driven by a theme. We are GraceKennedy, unlocking value, unleashing greatness. We think it's a very powerful theme that will drive our team to really deliver the best for our business. We are GraceKennedy really speaks to that legacy I shared with you of 103 years, who we are, what we stand for, our core values which are unchanging, and the people that make GraceKennedy the great company that it is. Unlocking value and unleashing greatness speaks to the future and what we are going to be doing to really change the game for GraceKennedy and take us to newer and greater heights. We feel there's greatness in our people, and as we unleash that greatness, we're going to unlock tremendous value for our shareholders and all our stakeholders. So we're excited about our theme for 2025. We are GraceKennedy, unlocking value, unleashing greatness. What will be the key areas of focus? Revenue growth continues to be an area of focus. We are going to accelerate the revenue growth. You saw that we were growing in 2024 by just under 8%. We want to accelerate that revenue growth. And there are a number of key areas that we're looking to get that revenue growth from. We have to continue to invest in our Grace and Grace-owned brands. We have very strong brands, and we need to continue to invest behind them to grow them both in the domestic market and internationally. We are going to be continuing to deepen our channel expansion. In Jamaica alone, we expanded our points of sale by well over 1,000 points of sale last year. We're going to continue on that drive. We're looking at new geographies in our international markets to expand to. And as we mentioned earlier, we have new product innovations that's going to drive that. We also are going to be accelerating our focus on mergers and acquisitions. You have seen over the last few years a number of mergers and acquisitions. This year already, we have completed the acquisition of Catherine's Peak. So we are now the 100% owner of the Catherine's Peak brand. We acquired the last 30% this year, and this has really solidified our position in the spring water market. We now own our 876 brand and our Catherine's Peak brand, which play in different segments of the spring water market. And we own our own factory in Unibev, so we continue to grow as the leading spring water in Jamaica. But our acquisitions go beyond that. We're in active discussions across North America, UK, Europe, and within the Caribbean region, working with our investment bankers to look at opportunities for growth in those markets in line with our 2030 vision. So you can expect to be hearing more around our M&A activity. Very importantly is our focus on innovation and driving innovation. You saw a number of the products released in 2024. Of course, I can't tell you the new products that are coming in 2025 yet, but there are a number of new products that you will be seeing in 2025. There is one, however, that you will be getting the breaking news on right here at our investor briefing. As we approach Easter, we have heard our consumers. One thing that we'll do is listen very closely to our consumers, and our consumers have told us for a number of years that they want alternative packaging for their tasty cheese so that they are able to access their tasty cheese a lot easier. So this year, this Easter, you will be seeing in the market our new easy open tasty cheese can. It is the same great tasty cheese that you have become accustomed to, but you simply lift the cover and you'll see an easy open can underneath. So you can easily flip the cover and open and access your cheese. Now we know that some people have become experts at opening the tin, so you will also have that alternative for those of you who have become real experts at it. But we want to listen to our consumers and give you options. So look out for this in stores as we get closer to Easter. Breaking news, it's not in our stores yet, it will be there for Easter. So these are some of the ways in which we continue to innovate, whether it's through packaging or totally new products. But the important thing is that we're listening to you, our consumers, and determining how we can meet your needs. So driving innovation is going to continue to be a feature of how we drive revenue growth for the business. Digital transformation, especially in our financial services group, we see this as a big game changer if we get digital right, and we have been getting it right. So our GK1 app, which I told you is ranked very high in the App Store, high repeat usage, is one that we plan to not just use here in Jamaica, but to expand to other Caribbean territories. And we're going to be doing this on a phased basis. Within this year, we will be entering into 3 new Caribbean territories with our remittance functionality. And we'll be able to expand the functionality in those markets as it becomes applicable. But we will start with our remittance functionality in these Caribbean territories. The great thing about our GK1 app is that it allows us to expand even into non-English speaking territories as well, because it's multilingual. So we have the ability not just to go into our English speaking territories, but our non-English speaking territories. So very exciting times for this. We are going to be launching the GK1 app. I'll share with you the 3 new markets, Trinidad and Tobago, Cayman, and Guyana in 2025. We already have provisional approval from the regulators, so we are looking forward to this launch. We're also testing new functionality in our GK1 app, which is going to allow our remittance senders to transfer funds directly to a GK1 user's mobile wallet. So on your phone, you have your mobile wallet. You no longer need to walk around with a physical wallet, and you're going to be able to use the mobile wallet with your Shelly card, as we call it. You'll see on the screen there the GK1 Visa card, and we'll be able to put your remittances straight to this card so that you can start spending using your GK1 Visa card, or as we like to refer to it, your Shelly card. So we're coming out with that, and that will be launched before the end of the first half of this year. So lots of new features coming out on the app to really drive growth in digital, and this is going to transform the way we do our business. Remember, the GK1 app is not limited to remittances. It also is our banking or insurance products, so products across the group that are all offered on our GK1 app. If you don't have it yet, please go to the Apple or Android store and download the GK1 app. While we transform our business through digital and our remittance business, we are also transforming our retail space, because retail continues to be an important part of our remittance business. So through partnerships with companies like Quartz, Unicoma, and our own Hilo and First Global Bank stores, you will now be able to go into these stores and have a Western Union window where you can do your transactions. Very convenient, very accessible, and also helping us to continue to manage the cost of delivering this service to the business. So look out for those transformations. The Unicoma business is going well and growing well, and you'll be seeing our Western Union in more and more Hilo and First Global Bank locations. The international competitiveness of our manufacturing companies. Manufacturing remains a very core part of our business, and we continue to drive the growth in that business, especially to grow our exports. Now, we have not achieved our target of 50% in exports, but that's not because we haven't been growing the international. The international has been growing, but in fact, our domestic business has actually grown quite aggressively, and we really must thank our Jamaican consumers for continuing to support the Grace brand the way that they do. So we have continued to see growth in the domestic market, and so as a percentage, you'll see that that shift has not taken place in the way that we had planned. In addition to that, with the acquisition of Unibev, that product is primarily for the domestic market. So we have now added a factory at the end of 2023, and that product is larger for the Jamaican market. But that product now is going to be being exported as well. So this year, we're going to be starting to export Catherine's Peak water to Cayman initially, and we're going to continue to grow the exports of our products out of the Unibev factory. So with those increased investments here, we're going to be revisiting our targets around our exports, but growing exports continues to be a fundamental part of how we're going to compete and how we're going to grow our manufacturing business. A key element for our manufacturing business also is ESG, or sustainability initiatives. I spoke earlier about our investments in renewables through solar technology, and that continues to be a big part of the focus for our factories. But also we're looking at how we can preserve the environment and reduce the use of virgin plastics. So in this year, 2024, we are going to be having a reduction of 25% in the use of virgin plastics, again, in our water products, Catherine's Peak, and some of our other PET products. So this is another way in which we are showing our commitment to our ESG strategy, and we will see that reduction this year in terms of a 25% reduction in the use of virgin plastics. A key area, especially over the last 3 to 4 years, has been logistics and supply chain. With all the changes, first with COVID, and then all the activity that has been happening in the trade environment, logistics and supply chain has only become more and more complicated. And so we have to be ahead of that. And so we have invested in our people, we have invested in our technology, we have invested in our infrastructure to ensure that we are able to use logistics and supply chain as a competitive advantage for the group. In this way, we have been able to continue to improve our service levels and make sure that when you go to the store, you find the products that you want when you want them. And we are also expanding our infrastructure to be able to meet those needs. So on the screen, you will see our distribution center, our main distribution center, and you'll see that there's quite a bit of land for expansion. Now, we are actually actively expanding the distribution center because of the growth that we have seen in the business over the last few years. Last year, we expanded by another 10 new dock doors, and this year, we're going to be expanding by another 25,000 square feet at that distribution center with new cold storage to meet the needs of our cold chain, as well as increasing our ambient storage availability. So over the next few years, we have a roadmap of how we're going to be expanding our storage and warehousing capabilities to be able to meet the growth in the business going through to 2030. But importantly as well, there's the investment in the technology, which is going to see us improving our logistics and supply chain, or visibility through our supply chain significantly, to be able to be very agile and respond quickly to the very dynamic and changing environment that we operate in. A lot of discussion about the trade environment globally going on, and so we have again been very proactive in how we're going to be managing that and ensuring that we can deliver on our objectives in whatever scenario plays out in the global trade environment. This includes onboarding alternative suppliers. That work has been ongoing. Looking at opportunities for nearshoring, we have spoken as a country a lot about South-South trade, and we're seeing those opportunities and taking advantage of them. Diversifying our product mix and our source of raw materials, and then managing our inventory extremely carefully and determining where we bring in additional inventory to make sure that we can meet our needs while managing our costs and ensuring competitive pricing. So it's a very detailed and focused strategy that we're taking to manage the trade environment, which, as you have seen, is extremely dynamic. Another key area of focus is operational efficiency. So we're going to be growing revenue, but we're going to be doing it profitably. That means more of every dollar of revenue that we bring into the business needs to be falling to the bottom line. A big part of that is the investment in technology. On our financial group side, we have invested in Oracle ERP system, and we expect to see the benefits of that starting in this year and going forward. And as I mentioned, S/4HANA on the food side of the business. So those technology investments, along with changes like we are doing with our energy plans and other operational efficiency improvements, will drive more to the bottom line. And we're going to be measuring that through our PBT to sales. None of this happens, none of the results you have seen happens without our team and without a highly engaged team. So for me, this slide is extremely important and very exciting. The global benchmark for employee engagement is 67%. When we started measuring employee engagement in 2022, we were monitoring employee satisfaction before, but we changed that to employee engagement. And in 2022, we were at the global benchmark of 67%. So we were very excited in 2023 when that moved to 73.4%. And I'm pleased to share with you that when we measured again at the end of 2024, we have again seen an improvement in our employee engagement to 75%. While we're extremely happy about this, we are not complacent. We continue to get feedback from our teams and invest in our teams, in our development and training, in leadership management, in our succession management, and our total rewards framework to continue to drive employee engagement throughout the group. Very, very important metric for us, and one that we take very seriously. So those are the areas that are going to drive the growth in your business for 2025 and beyond. And when we speak about beyond, we are committed to our 2030 vision. And so I want to remind us all of what our 2030 vision is. Our 2030 vision is to be the #1 Caribbean brand in the world. So anywhere you go in the world and you hear Caribbean, you think of GraceKennedy. And we are committed to driving the growth in our brand to be the #1 Caribbean brand in the world, providing strong returns to our shareholders, and importantly, improving the quality of life of our team members, our customers, and the communities we serve. And I think that part of the vision really is encapsulated in what we say is our purpose, which is to contribute to a better global society. So we have to deliver on the numbers and on the financials, but we're going to be doing it in a responsible way that contributes to a better global society and greater financial well-being for you, our consumers, and our customers. What does that mean in terms of the numbers? We have said, and we remain committed to these objectives, that we want to have 70% of our revenue and profits generated outside of Jamaica. Now, importantly, this is not because Jamaica is going to decline. Jamaica is going to continue to grow. In fact, the numbers that you are seeing will show that if you look back at 2022, you will see that Jamaica has grown faster in 2024 in terms of profits and in terms of revenue. So our Jamaican business continues to do well, and we expect it to continue to do well. But and our international business also continues to grow. So it's not a lack of growth on that side. But when you look at the potential through to 2030 in terms of the size of the market in our international markets, we believe there's a big opportunity to get that ratio to 70% while continuing to grow in the Jamaican market. We want to grow our revenue to 2.1 billion. So we celebrated $1 billion US in 2023. Well, we need to break the $2 billion US mark, and we want to get there by 2030. So that means doubling our revenues to 2.1 billion US. But we want to triple our profitability. So we have to grow that revenue, but grow it profitably. So we are today at 79 million US, and we want to get to $250 million or 250 million US by 2030. We continue to look at the opportunities for the listing of our financial group and our foods group on our Caribbean and International Stock Exchange, respectively. And I'll share a little bit more about where we are in that process. And of course, as I said, driving our employee engagement, it underpins all of these objectives. ESG remains a key part of our strategy. And again, I'll share where we are in our ESG journey. So how are we doing on these plans towards 2030? We are working on the restructuring of our balance sheet. When we spoke with our investment bankers, there was an amount of work that needs to be done to really structure the group if we are going to be able to list on an international stock exchange. We have looked at the structure, identified what that preferred structure would be, and of course with these kind of transitions, we always have to understand what it means from a tax point of view. So we have engaged PricewaterhouseCoopers to work with us on that, and we are looking through all the territories to do this. Now, also a big part of being able to do this is meeting those 2030 numbers around growth. So what we are focused on now is growing the business to make that idea of listing be a reality. Mergers and acquisitions, we are meeting with targets directly and through our investment bankers, and we see a number of opportunities that we expect to reveal themselves over this year and future years going through to 2030 in terms of M&A. We see that contributing meaningfully to our revenue and profit targets that have been set. And then ESG, we have now launched an ESG hub on the GraceKennedy website, and this is really so that you can hold us accountable for what we are saying about ESG. You can go on that hub and see where we have reached with the things that we have promised in relation to our ESG goals. And I'm happy to say that those goals have been going well since 2022. Through our GraceKennedy Foundation environmental projects, we have prevented over 3 million kilograms of waste from entering the Kingston Harbor. It's a great, great initiative. And even that doesn't solve the problem, but we feel we're making our contribution to helping to protect the harbor. We have been driving volunteer hours through our team members. That's another key metric. And also our charitable contributions, which were over $250 million Jamaican dollars in 2023 and again grew in 2024. So our ESG program remains very active, and you can keep a track on us on our ESG hub on the GraceKennedy website. So I've shared a lot with you today, but very importantly is all that we have achieved and all that we plan to achieve will always be guided by our core values. Our core values do not change. They remain the guiding force behind all the decisions we take, all the interactions we have. And this, I speak for the entire team when I speak about our core values. Honesty in what we say and do. Integrity, meaning our word is our bond. Trust, to inspire and earn trust and confidence. Commitment to quality and service. Humility without pretension or self-importance. And respect for our customers, for our staff, for our peers, managers, directors, for everybody. So these are the core values. It's not an accident that the group is around for 103 years. These are the core values that have kept us around for 103 and will keep us around for the next 103 years. So you have my commitment, you have the team's commitment to be guided by these core values. So in closing, I want to thank you. I want to thank our board, our team members, our customers, all our stakeholders, including our shareholders and business partners, and many of you who are on this webinar, who have made GraceKennedy over these 103 years a very loved Caribbean brand. And you have our commitment to continue to drive towards our 2030 purpose and vision while remaining true to our core values. Thank you very much. I'm going to hand over to Andrew Mesado, who is going to share on our financial results. Andrew, over to you.
Thank you, Frank. And good afternoon, everyone. I'm going to give some brief highlights of our financial performance for 2024. As you know, we released our results at the end of February. And you'll see from the results that all our key indicators are positive. In terms of revenue, we made 167 billion Jamaican dollars. That's up 7.8%, or 12 billion, 9 of which came from our food division and the other 3 billion from our financial services. And then our profit before other income, which is a key indicator of our operating performance. That was up by 6%, or to a total of $8 billion. And some of the driving factors there is we've seen improved margins on the food side. We've also seen improvements in our operational efficiency. So Frank spoke a lot about our technology and solar energy, and these are elements that are improving our internal efficiencies. Also, we've seen that inflation has been coming down, both in Jamaica and across the world, which has led to more stable prices. And so we've also seen on the financial service side where our bank has grown its loan portfolio. So some of those are the driving forces behind our improved other income, profit before other income. And then profit before tax up by 8.6%, or just under $1 billion to 12.3 billion. As Frank mentioned, this is a historic year. It's the first time that we've achieved that $12 billion profit mark in our results. Not mentioned here, but profit after tax also grew. Some may say that you'll see it grew just under 6%, and you kind of wonder why it didn't translate to the same 8%. Mainly because what we had in 2024 is that some of our financial service companies, which are taxed at a higher rate, earn more profits. We also had in 2023 some one-off non-taxable gains, which didn't recur in 2024. And then some of the intangible assets that we would acquire when doing our acquisitions, the amortization on those don't have relief from income tax, don't get an income tax credit. So that would have been another factor driving up the effective tax rate. Nonetheless, though, we did show growth in profits both before and after tax. And then profit attributed to stockholders. This is a metric that I like to keep a track of because for those of you who are shareholders, you know that this is your profit. This is the portion of the profit that belongs to the GraceKennedy shareholders, and that's up by 8.1%. Now, on the balance sheet side, you'll see that our assets grew by 7.8%, or $17 billion. And some of the big areas in which we saw growth in our assets were our investment portfolio. Also, we saw growth in our fixed assets and in our loan book of business, that's loans receivable that our bank has. In particular, when I want to focus on the fixed assets, we've been doing investments on our equipment that we're using. That includes computer equipment, solar energy. It also looks at our warehouse space, which we've been upgrading and expanding. And also for our factories, we've been upgrading our factories and enhancing the equipment within and plant and machinery within our factories to enhance our productive capacity. And so those are the highlights from the asset side. On stockholders' equity, you'll see that is up 10%, and that has grown both from additional profits being earned as well as the improved value of the properties that we hold across the group. Now I want to just give a little highlight on the dividends that we've been paying. And what you'll notice is for 2024, we saw an increase of $198 million in our dividends. That's an increase of just over 9% in the dividends. And you'll also see that over the past 5 years, we've been very consistently paying dividends, and also these dividends, not only have they been consistent, but they've been increasing year over year. And part of that is making sure that one, our profitability continues to improve, and two, that we have sufficient cash reserves that we're able to distribute dividends from. And you'd have also heard announced recently that we're going to be paying a first interim dividend for 2025 on the 7th of April. It's going to be 55 cents per stock unit, which translates to just over $540 million in dividends. So you can look forward to that payment next month. Now I want to give a few highlights on the segment results for revenue. So what you'll see is 3 out of 4 of our segments have shown growth in revenue. On the money services side, you'll see a marginal decline of 2.5%. And as Frank had mentioned, we have been seeing that there have been some reductions in the flow of remittances to some of our key markets, an example being Guyana. Nonetheless, some of our territories have been growing. So in Bahamas, we've observed an improvement in the revenue. So some of our it's a mixed situation, but overall marginal decline on the money services revenue. One of the things that we've been focused on, though, is improving the distribution channels for remittances. So you heard a while ago that we've been focusing on digital remittance products, and in particular using the GK1 app, you're able to send through the digital, send and receive funds from using the GK1 app. And we also have digital partners like Link, where you could receive remittances through as well. Then on the insurance side, you saw an improvement of 13.8%. This is mainly coming from our general insurance companies. They've seen growth in both their motor and property portfolios. So our general insurance companies are doing well. You also heard earlier about our partnership with Scotia Protect, and that's a product that continues to grow. And then on the health side of the business, we're also seeing improvements on the health insurance side. Then for banking and investments, I mentioned earlier that our bank has seen an increase in our loan portfolio, so we're growing that. And then on our investment side, we're also seeing additional transactions. Now, for food trading businesses, as you heard Frank mention, we have merged both our international and domestic food businesses under one portfolio. And both the international and domestic businesses have seen growth in revenue. I'm going to talk a little bit more about that when I go to the profit side. But overall, you'll see that strong growth across all our businesses, with the exception of money services, where there's a marginal decline. In focusing now on the profit side, you would see that similar to revenue, 3 of our 4 segments have shown growth in profitability. With money services, it's a combination of the reduced flows, that's the revenue filtering down, and then also, as we mentioned earlier in the presentation, there has been a tightening of margins in terms of fees, and the return there. We have to look at that very closely because there is increased competition. And so we have to look at ways to improve how we distribute and deliver the remittance product. And a big part of that is a digital focus, and also looking at efficiencies within the money services businesses. And then on the insurance side, you'd have seen that growth of 7.8 7.9%. And that shows growth across our insurance segments. So we're seeing improvements in the general insurance side as well as the health side. Our business Canopy Insurance in Jamaica continues to do very well. Also, for banking and investments, the bank has shown improved performance, not only from its loan portfolio, but also its trading side in terms of foreign currency flows and other income from that business. And they've also been focused on efficiencies to deliver the products in a better way to you. First Global Bank has this global access software, which is a convenient way for customers to conduct their banking businesses. And then on the investment side, we saw improvements there as there was some level of recoverability on the equity portfolio. So that business, as you see on the banking and investments, up by 25.7%. On the food side, as I had mentioned earlier, strong growth, both domestic and internationally. Both our Grace brands and our Grace owned brands also showed growth. And then if I was to start mentioning some of the businesses, in Jamaica, all of our distribution businesses, the businesses that distribute our Grace products as well as third-party products, did very well. For our factories, overall our factories had a good showing for 2024. Dairy Industries showed improved performance, and our Nalcan factory, which does the production of our tropical rhythms, our porridges, and other products like our ketchup, that factory also did very well. And then the newest factory, the Unibev factory, which we acquired at the end of 2020, towards the end of 2023, that business is profitable and contributing positively to the overall profits of the food division in the domestic space. Also, Hilo, they continue to look at ways to improve the convenience to customers and the customer experience. So in 2024, we had improvements in terms of renovations to our UE store, university store on the Mona campus, as well as our Manor Park location. And for 2025, there are already renovations in progress for some of the other stores to improve the shopping experience. And then on the international side, you will, our USA business, that business has delivered steady profits and has shown growth both in the Grace brand and the Lafay brand, which is a brand we acquired back in 2014. Also, for UK business, that business did very well in 2024. And they launched a number of new products. You'd have seen them earlier. So we had what we call our Nourishment Fusion products, blueberry and hazelnut being some new flavors. We also had the Honey Jerk seasoning, which was recognized and is a new product innovation. And also, as you heard, Tropical Rhythms, we've launched it in a new kind of format, sparkling Tropical Rhythms in the UK. So those are some of the innovations there, and the business there is doing very well. And then the last one I'd mentioned on the international food side is Canada. Canada had a difficult year in 2023, but has recovered very well in 2024. We saw improved margins, and we also saw close monitoring of expenses and cost efficiencies, which led to improved profitability for the Canada business in 2024. And you heard it earlier mentioned, we continue to improve the food business overall, and you'll see that now accounts for over 60% of the group's profitability. The other thing I'd want to highlight is insurance is now the third segment overall to show profits of over $2 billion. And overall, all of our segments are showing profits of over $1 billion, which really shows the diversified earnings of the group and our ability to earn across various industries. And those are the highlights I'd like to give. Thank you very much.
All right, thank you very much, Andrew. Well, now the floor is now open for questions. So by way of a reminder, we will be taking questions via email. So please email us at gkinvestor@gkco.com or by text to our communications team at 876-537-1950. gkinvestor@gkco.com or text 876-537-1950. So we have some that have come in from Limitless Podcast. Any update on the plans for overseas listings? So Andrew, I'll ask you to take this one, but we did mention that we are in the process of doing some amount of balance sheet restructuring for that. Andrew, you want to update on the overseas listing?
Thanks for that question. So yes, this is some discussions we've been having with our international banking partners, international investment banking partners, who have been guiding us as to what's the appropriate time for listing, and also what's the appropriate structure for listing. And so we want to ensure that when we do this listing, it's attractive for investors, and it shows the right mix of earnings, both locally and internationally. And so that's part of our 2030 vision, to ensure that we have the right foundation from which to list. So at this stage, we continue to explore it internally, look at the structure, and also position ourselves appropriately in terms of our earnings and how we earn across the globe.
All right, thanks, Andrew. And the other question is the 2030 vision still on track? Yes, as we indicated, we remain committed to the 2030 vision and on track for that. We are currently at the $1.1 billion revenue mark, and we will aim to double that by 2030 and to triple our profits from 79 million to 250 million. ESG is a key part of that, and you heard a number of the initiatives around our ESG. So yes, we remain on track for 2030 vision. Are there any ways GK may benefit from the tariff wars? So I think in every challenge there's an opportunity, and we mentioned a number of the ways that we have been very proactive in looking at the trade environment, which includes looking at alternative suppliers or product mix or strategic inventory management, nearshoring. All of these things, whether or not the trade environment changes, are actually ways in which we can benefit, because having alternative suppliers allows us to be more flexible, allows us to manage our costs, allows us to ensure our service levels and availability of product. Innovation around our product mix and sources are also positive for those same reasons. So we think that the work that we're doing in this area will benefit us irrespective of what happens in the trade environment. And then we have a question from Nation Barbados, Sean Cumberbatch. Thank you very much, Sean. What is GK's views, Andrew, you can probably take this one, on plans to introduce a regional stock exchange? The CARICOM private sector organization is currently studying the matter to determine its feasibility.
Thanks. So, in terms of a regional exchange, what we've seen on the Jamaica Stock Exchange is actually a number of Caribbean companies doing listings, cross listings on the Jamaica Exchange. And so definitely we see a kind of deepening of the market across the region. However, in terms of having a single exchange in the Caribbean, that one we need to see what are the kind of advantages of it. I'm sure there are pros and cons to a single regional exchange, but we're going to need to look at how the Caribbean private sector organization kind of does the research and looks at the feasibility of this to see if it's really the appropriate or more efficient mechanism for stock listings across the region.
Thanks, Andrew. And another one is how are from Nation Barbados as well, how are the company's investments in Barbados doing, and are there plans to increase investments in this market? If so, what specific sectors will you be doing so? A major investment for us in Barbados is our 50% shareholding in Signia Globe Merchant Bank, and that bank continues to do very well for us. It is the market leader in the merchant banking space in Barbados, and we continue to be very happy with that partnership. Also, more recently, you would remember that we acquired GK Life Insurance, and that has given us access to a number of Caribbean markets in a short space of time. Included in that is Barbados, and that market is performing strongly and meeting our projected targets. Of course, our food is distributed in Barbados, and that's also very important. So we're always exploring investments in the region. Barbados is definitely an important economy for GK, and so we remain focused on building out both our financial services and our food operations in Barbados. And then the final one from Nation Barbados. Do you have any recommendations on how the ease of doing business in the Caribbean can be improved? Good question. We certainly agree that that is an area that needs to be improved. It is too difficult to be doing business across the Caribbean. And we are focused certainly on making sure that we can be doing business with our customers more easily across the Caribbean. I think there remains a lot of bureaucracy and challenges, and while I think in Jamaica we have seen some improvement across the Caribbean, there's still a need. Whether it's around how we get permits and how we get access to markets, how we're able to access credit across markets as different Caribbean companies do business in different countries. I think all of those are areas that need to be looked at to explore how we can improve the ease of doing business. All right. See what other questions we have. Andrew, I'm going to ask you to take it about operational efficiency. GKMS, you indicated that there are pressures on margin. What steps have been taken to improve efficiency for the money services?
Okay, thanks for that. So a big part of for money services, is the efficiency we believe will come from technology primarily. So in terms of customer-facing technology, that would be in terms of digital remittance options, looking at our GK1 app, and how you can use that convenient channel. Because with a digital remittance channel, it doesn't limit it to kind of the regular day in terms of a work week. You can access the digital remittance channel on a weekend, at nights, anytime. And so that's a convenient way that we see it, and it is a way to reduce the cost of delivering that service to our customers. In addition to that, just general operational efficiency from the use of IT, the use of the AI tools, and the use of our Oracle software as another example in terms of our internal processes will also be able to see improved efficiency through that use of technology. The digital factory that we have, it's an investment that we spend over $2 million on a year, and we're looking to drive improve revenue through that channel in order to get the payback from that investment. And then we also have partners, digital partners like Link, and we're looking at other financial institutions who want to partner with us to deliver our services digitally. So those are some of the ways we're going to be able to see improved efficiency.
All right, thank you very much, Andrew. And we have some questions coming in from my friend Al Edwards. Al, good to hear from you. You will be ramping up your M&A activity. Will this be more on the food division or more so on the financial services side? So we're looking at opportunities on both sides of the business, both foods and financial services. There are discussions that we will be having around that. One of the things, of course, is that it has to be in line with our 2030 vision, which is to get 70% of our revenue and profits outside of Jamaica. Now, as you can imagine, our financial services strategy is really focused on the region. Our food strategy is focused globally, internationally. So there will certainly be more opportunities to drive that 70% in that international space. So that will give a bias towards foods. But we are looking at both opportunities on the food side as well as our financial services side. So we have a number of questions related to the tariffs. I see one from David Rose, and as well as Al. So how will the USA tariff implementation affect our companies internationally and our supply chain in Jamaica? And a somewhat similar question. So as we indicated, this is a very dynamic space, and it's something that we have actually been working with a team on to assess the impact on the business. What we are committed to do is making sure whatever happens that we are able to achieve our objectives, and therefore what I shared with you earlier was really how we are going about that, looking at alternative sources of supply, looking at our product mix, looking at our inventory management strategy, looking at how we take costs, because clearly tariffs can have an impact on the cost of raw materials. So how do we take costs out of our products? Through repackaging initiatives, through reformulation initiatives, and through sourcing initiatives. So a number of activities that we will use to make sure that we can still deliver whatever the trade environment brings, because I think one thing we have realized is it's going to be a dynamic environment, and therefore we have to be agile in the way we're able to respond to the changes. All right, this one is from David. It says, Frank spoke about improving the tax efficiency of the balance sheet. Is it that GK is seeking to be more strategic? It moves capital amongst its subsidiaries. Also, is that a part of tax optimization? So, David, I think this was really in response to the point about preparing for listing under our 2030 vision, where we spoke about the balance sheet restructuring and the work that we're doing with PwC. So, Andrew, you might want to speak to that, but that's really more about preparing the business and understanding the tax implications in various jurisdictions.
Yes, that's correct. So, I mean, again, if we're going to be adjusting the way that the balance sheet is structured in terms of which company, how the ownership structure of the food businesses is designed, then we want to make sure that it's efficient, that we don't incur additional costs by moving around assets, in a certain way that's not optimal. And then just looking generally at where we locate these businesses and where they're headquartered is also a factor. So it's really to get good advice. So tax is one of them, but legal is another. Again, how does it work? Is it more from an international perspective? Is it internationally owned or is it domestically owned? And then how does the different businesses relate to each other? So it's really looking at the optimal structure from an efficiency perspective, which covers legal, tax work, and other criteria. So that's kind of the thought process behind doing this review.
All right, thank you, Andrew. What measures is GK taking to secure a steady supply of produce in response to climate change? So that's a very good question, especially with the challenges we saw in the domestic market last year, Hurricane Beryl, but even outside of the hurricane, we were going from too much rainfall to drought in a number of seasons. So one of the things that we have done is we have acquired the agro park that we have in St. Elizabeth, which is a 100-acre agro park, which we then lease out to our farmers, so that the farmers operate it, the small farmers operate it, but what we bring to the table is research into how we can improve the resilience of our farmers and the best practices, both to improve resilience but also to drive better yields. So we have been doing research with a number of entities outside of Jamaica and then imparting that knowledge to our farmers to help drive that growth. We're also exploring new irrigation technology with a university outside of Jamaica to see how we can make that available. We're working with Caribbean Maritime and the Heart Trust to utilize AI and robotics for pest detection, harvesting, etc. So the technology is changing the way that agriculture works, and we think there are lots of opportunities to really take it to a new level. And by having the agri-park and being able to use some of that to research best practices, we think we can have a significant impact in working with the farmers and introducing both resilience, but as I said, also improved yields in that business. All right. I have a number of questions here. So Andrew, you can take this as also about operational efficiency through technology. How are we using IT as a competitive advantage for growth in the group and for improved operational efficiency?
Okay, thanks. So, I mean, the technology we're using, it's on several fronts. The first front is, the customer-facing type technology. So, we have a number of customer-facing technology. We had mentioned the GK1 app, which covers remittances, it covers banking, it covers insurance in Jamaica. But in addition to that, the bank has their global access software, which again is improving the convenience of doing transactions. For our GK General business, you can do pay your premiums both from the app and also from the web browser. And then in terms of internal processes, we see the use of technology on the food side through our SAP S/4HANA software, which has a number of efficiency improvements and improved delivery of information to make better decisions and make those decisions faster. On the financial services side, we have our back-end software, Oracle, which manages primarily the financial accounting side of the business. And then in terms of our securing our infrastructure, we have enhanced cybersecurity through our IT platforms that enable us to be resilient against cyber attacks, which of course can stall the business if they're successful. So those are some of the major ways. We also engage third-party IT providers who assist us in making sure that the transmission of our information is effective and also protects the customer data. So those are some of the ways that we have an advantage, because based on our size and our negotiating, we can also get good pricing on those licenses.
All right, thanks, Andrew. Another one from Al. Will you be stepping up your exports of Catherine's Peak? What markets will you be targeting? Well, Al, I can't share the markets right now, but yes, we will be stepping up the export. We do see potential in the region for further exports. In fact, even today I had a discussion about another territory outside of Cayman. So that is something that we're going to be actively looking at, opportunities for export of our spring water. Then we have from an anonymous, are there any plans to integrate banking and investment services, especially in GK1? So absolutely. First of all, we already work very closely with both GK Capital, or or investment and wealth arm, and First Global Bank, work very closely together on initiatives. So there is already that integration, but GK1 does precisely that. So GK1, we've spent a lot of time today talking about what it does for remittances, but GK1 actually offers services for insurance customers. It offers services for banking customers, for investment customers. So across the spectrum, GK1, and even there are even opportunities on the food retail side. So GK1 is not limited by any means to remittances, and so yes, both banking and investments, as well as insurance, as well as remittance services, are a part of the GK1 offering. Okay. Given the call from the BOJ re-lending rate reductions, will FGB be reducing rates? So we continue as First Global Bank to monitor the interest rate environment very closely. And in fact, on new applications, we have already started reducing rates. So that is already a step that we have taken. Periodically, throughout the year, we do an assessment of the environment and make decisions on how we adjust in terms of that. When we look at the economic conditions and the trends of where interest rates are moving. So that is an ongoing process for us. Okay, I'm getting quite a few questions here. All right, Andrew, you can probably take this one for me. This is about GK General Insurance and what has been the key factors. You mentioned in your stockholders report that GK General Insurance showed strong growth in revenue and profits. What were the key factors driving GK General Insurance results in 2024?
Thanks. So in terms of GK General, they did see growth in both their motor and their property portfolio. Part of that is driven by the partnership with Scotia, and that we're looking to continue to expand that partnership. But also, GK General is able to secure significant capacity. About a year ago, or a year and a half ago, you'd have heard that the insurance capacity of some of our some companies in Jamaica was challenged because of all the natural disasters. But we have very good relationships with our reinsurers, so we have capacity to take on new business, and that has worked to our advantage in terms of being accessible to customers who need to write new business.
Thanks, Andrew. And we have another question here, Gary Mitchell. What is our consumer footprint on the African continent as well as in Asia? So we do not have a very large footprint there. We had stated as we drove the 2030 vision, our focus on growth, of course, continuing to grow in Jamaica, but growth in North America, meaning US and Canada, and the UK and Europe as our targets for growth. Africa was also a target for growth, and we did actually have a physical operation there, but we came out of that operation. We still distribute our products in West Africa, but it's a very small footprint right now. Not a market that we have given up on, but one that we had to reassess, and the opportunities both in the North American and the UK and Europe market are so significant that we need to ensure that we have sufficient focus as we determine how next we'll focus on Africa. There was another one about Asia similar to this from the Anonymous. And so no, we don't have a very strong footprint. I mean, you will go there and sometimes see that persons have, probably shipped products there, but we don't have an active distribution relationship in Asia. All right. Andrew, this one is for you. GK, the company, saw a net reduction in debt with the overall group seeing a marginal decline. Debt to equity is around 0.35 times. Is there a target limit for debt to equity? And as part of your expansion plans, will GK be looking to lever up for its growth plans?
Okay, thanks. So yes, GraceKennedy does have quite a bit of capacity to borrow. As you'll see, the debt-equity ratio is under 40%. The reason why we reduced, again, you'd have seen over the past year to year and a half that interest rates have been increasing, and therefore want to make sure that we're only borrowing as necessary. And so we manage our working capital very closely so that we can reduce working capital borrowings, especially in times when interest rates are rising. But as part of our ability to borrow for acquisitions, yes, we do have debt capacity. You'll note in our annual report, we actually state in the audited accounts that the maximum debt we'll take on is an amount equivalent to our equity, so a 1-to-1 ratio. And so based on that, we do have quite a bit of capacity, and we do have several banking lines that will allow us to draw down loans quickly if we need to borrow, whether it's working capital or also for M&A activity.
Thanks, Andrew. We only have a few minutes left, so we'll see how many more questions we can get done. Thanks for the many questions. If we don't get them done on this webinar, then we'll certainly answer them post the webinar. Does GK anticipate increasing its position more in insurance companies, and will there be more bias towards life over general? Also, how was GK's experience during 2024 in terms of claim costs and other factors like reinsurance? So insurance remains a very important part of our growth plan, and you will see that over the last few years we have invested in M&A and organic growth in our insurance businesses. No, there's not a bias of life over general. We believe that we can play in both those spaces very effectively. We have been in the general spaces for decades and have continued to be among the top general insurers and top insurance brokers in that space. And we see an opportunity in the life and health space, which we have started to take on both through our Canopy, which is our joint venture with Musson that has been doing very well, and also through our acquisition of GK Life Insurance throughout the region. So we continue to see a growth in that. We see life being a big growth area for us because that is new, and we continue to expect to be very dominant in the general space. Our experience in 2024 was quite good, so you'd have seen the growth that Andrew talked about in insurance in 2024, now generating over $2 billion in profits from that segment. In fact, our reinsurance has also gone very well. In a time when capacity was challenged, we were very pleased to be able to secure the capacity that we needed through our insurers, and we continue to enjoy very strong relationships with our reinsurers. Andrew, this is for you as well. Does GK think it would consider doing another share buyback in a more stable environment?
So in terms of the buyback program, primarily we had done it when we saw that our share price was undervalued, and we thought it made sense to invest in our own stock. We think that it went fairly well, quite well for 2024, but at the same time, we have to determine what's the best use of our excess cash and capital, whether we're going to invest in M&A or if we're going to reinvest in our own shares. So at this point in time, we don't have a plan to reopen another buyback, having just closed the one that was recently done in 2023 and 2024. So no plans at this point in time for a share buyback, but we're always scanning the market and seeing what makes sense and in the best interest of our shareholders.
All right. Another one. How you noted that GKMS had a challenging year. How did it perform versus the market in Jamaica? GKMS Jamaica continues to improve our overall inbound share and volume share with improvements in the three major corridors that come into Jamaica. So we actually, while remittances to Jamaica were flat, GKR's Jamaica saw transactions growing. And as we mentioned, our digital business in particular has seen very strong growth. Okay, I think we have covered that question already. How is the partnership with Unicoma going? We are currently operational in about 20 Unicoma locations, and that business is growing quite steadily, and we expect to see quite an aggressive ramp up. So we see that as a very promising partnership for our remittance business. How are we doing on time? We have 1 minute more, too many questions to cover in 1 minute. Let's see what else we can get done. GK has a diverse product range that is growing from strength to strength, like the new flavors with nourishment and the chips. Do you think you can go head to head with companies like Goya? Thanks, Al. So we're very proud of the product range, and as I mentioned, innovation is going to be a key part of the growth strategy. The Lafay brand has been growing and doing well in the market, and we do see the combination of both the Lafay and Grace brands as competing with big players even like Goya in the market. So we are very excited about the existing range and about the innovations that you will be seeing coming for our product range in really taking our growth in the international markets to newer heights. So thank you very much for that question, and thank you for all the questions that we have received. We are out of time, but I want to again thank everybody for joining in for this webinar, and any questions we did not get to handle, we will update you on those answers. So, ladies and gentlemen, this brings today's briefing to an end. Thank you for your time and your participation. As of tomorrow, there will be a link to today's broadcast, which will be available on our corporate website. That website is www.gracekennedy.com. www.gracekennedy.com. If you have any additional questions, please submit them to gkinvestor@gkco.com. We value your feedback on the streaming experience, or any suggestions you may have as to how we can improve this. Please also send that to gkinvestor@gkco.com. Thank you all for joining, and wishing you all a great 2025.